Good morning, everybody, and welcome to the morning volatility report, or should I say a little more volatility report. It is I, Andrew Giovinazzi, Chief Operating Officer of OptionPit.com, welcoming you to let's just call it a quiet Wednesday. Our trading course for weekly options is this Saturday. Also, if you want to see our other stuff, it's right here, managing risk, using spreads, trading VIX, probably some of the best VIX trading courses and vol product trading courses out there. Great course on the ins and outs of commodity options, taught by a guy who's actually doing it all day long. Here we trade equity options, options on vol products. And again, here you can take out any of these prices you spend on any of our courses. We'll credit you one if you buy the gold course, and if you buy the gold course, you get all of this stuff comes with it. All right. So it is a great deal if you want to learn how options actually work and how to trade them and try to make some money. With that, it's Wednesday. Index is moving a little bit. VIX is moving up a little bit. We closed a vol position yesterday. The problem with settlement is you never know exactly, where it's going to settle. So it's not necessarily a risk I like a bunch, because it's way too much of an unknown. I haven't got the special opening quotation yet. When I do, I will post that somewhere. I'm looking at here, maybe 12 half, something like that. We got down to close to 12, a little below 12 yesterday, which was a decent exit point for any short vol positions you have. We'll look for some today in our chat again, going into the next cycle. Interesting trades. Tesla not moving very much. We've been looking at it for a couple of days. Elon Musk said something yesterday. I guess they got a super fast car. But volatility there, probably at lows since they listed the product. If I'm not mistaken, this is a 2-year chart. Getting there. You're starting to see, oh my gosh, I was about to say, this is Tesla, right? Yeah, I'm looking at two different things. I need my other chart up. I'm like, wait a minute, that's not Tesla Vol. Do this. Again, I don't know what's going on here. Right, you've got a quiet period with the SCTY buyout. Maybe put time spreads, things like that look okay. We did look at, now there's kind of a little bit of strange action as far as maybe vol going higher, rates going higher. There's been like a little bit more bullish paper in banking sector. We looked at a trade yesterday in our pit report for that. But man, there's not a lot else going on. There's biotechs have caught a little bit, but it's a very summer doldrummy type of market. Volatility and big cap technology is as low as it's been in ages. Why is this? Well, I think realistically, there's so much central bank intervention that they've thrown a wet blanket over everything by trying to make everything perfect. And at least for equity prices, there really isn't a reason for them to go down. I'm thinking since all the central banks are holding all this paper, they don't have to worry about marks. So where we go from here is anybody's guess. But unless there is some really bad economic news, who knows what corner it comes from. For right now, this is the market we have. And it could be like this for who knows when, at least till earnings start coming out. There might be some more upside catalysts, but for right now, unless we have really the Fed signal something new, like, okay, things aren't so bad, we're going to start raising rates, which seems very hard when there's near negative rates in other places. Potentially that causes some dislocation. Capital starts moving around again, and we could see something out of that. As of right now, there is just not a lot happening. So we will look at, again, individual trades. I still think the financials don't look too bad because of they basically have lagged the whole market the whole year. At some point, they should catch up. Looking for a longer cycle. Rallies we had in commodity and oil seem to be kind of stuck. Looking at USO, maybe again 1x2 put spreads are paying a little bit, not great. And we have a market that is kind of sitting here. And that's what we have. We have the summer doldrums. I guess we're coming up on the 1-year anniversary of the last, let's just call it flash crash, I guess. Don't exactly know what triggered that, but we're getting there. It was, what day was that? It was 21st, 20th, and 21st, so actually we're through it. So far different market than we had now. Again, one thing to note is you kind of had when the Fed started raising rates, we started having more average more average implied volatility than we had prior to. Just note the last year has been very volatile since, I guess, the Fed said they're going to start raising, or just getting out of the easing routine they have, the extreme easing routine they had. We had pops and vol, but nothing like we saw over the last year. So, the only way I see this is where the Fed really isn't bailing the market out, or they can't bail the market out really anymore. And so the shocks are steeper than they were before, when there was kind of that implied embedded Fed put all the time. And that is what we have for a market. That push to 220 we keep looking for. It looks like it is not going to happen. I know Yellen speaks on Friday, but for right now, we got as close as 219.50 yesterday in SPY, and we turned around and promptly went the other way. So let's see here. Oh, don't do that. I just closed everything. Anyway, so that's a good place to end. It looks like it's the end of my vol report. Because there isn't much vol report, I'll be back in our chat room a little later. Bye-bye.